So we're recording this 4 days after the collapse, and despite the government's backstop, there's still a number of unanswered questions. Senior reporter Keith Larsen has been reporting on this along with us, so he's going to help us analyze the loose ends these collapses have left and how we followed those threads through the week. Thanks, Keith.
Hey guys. So two areas we initially identified as big question marks for banking clients were the cash management side of Signature's business and also the letters of credit that the bank had put out.
Explain the cash management side, if you could.
So cash management is a service where basically lenders store deposits for property owners, and this could be rent money from apartment tenants. But when the bank was in danger of collapsing, landlords freaked out about losing money and tried to move it.
I wanted to turn to the letters of credit which affected SVB too. Letters of credit are often used by commercial tenants as security deposits. Say a startup wants to lease office space. They don't have the cash. They can get a letter of credit from the bank, which says, if this tenant doesn't pay rent, you can take out the money from us. It's a guarantee, essentially. Mm-hmm. But in the case of the bank's failure, the FDIC can actually choose to void letters of credit, and they have before in 2009. I spoke to this attorney at Allen Matkins in LA, Tony Matsis, and he was like, I've been telling clients to only get a letter of credit at a mega bank since 2008. And, he's saying that because the FDIC can void them. And if that happens, landlords have no recourse to withdraw payments if a tenant doesn't pay their rent.
And we don't know yet, right, if SVB's letters of credit will be covered by the FDIC?
No, attorneys are telling any holders of SVB-issued letters of credit to consider themselves, quote, unsecured debt holders, which the federal government has said will not be covered like the deposits will be.
Signature was also big on subscription lending, which is essentially providing lines to different institutions, the big focus on private equity and venture capital.
And then even though the FDIC is supposed to cover deposits over $250,000, we still don't know when exactly folks with accounts holding more than that threshold will be able to access their money.
And that can impact an owner's ability to pay their bills or just move funds to another bank.
And we also don't have a clear idea of what's happening with some of the loans at this point. We've heard from owners that some are being serviced as usual. And we know Signature Bridge, the intermediary bank that assumed all of the Signature assets and deposits, has opened for business.
But other landlords said they've received zero communication from the bank. One manager I talked to Wednesday said she had a bigger co-op loan with Signature and she just hasn't heard from it on whether the loan will be serviced as usual.
And there's even more uncertainty around delinquent loans or loans that hadn't closed when Signature shut down. We still don't know if those will go through or not.